Good morning. Thank you all for joining us today for the Lytham Partners 2024 Investor Select Conference. My name is Joe Dorame, Managing Partner of Lytham Partners. I am pleased to be joined by Brooks O'Neill, Senior Research Analyst from Lake Street Capital Markets. Brooks has more than 30 years of experience covering healthcare services and device companies at Lake Street. Brooks, welcome, and thank you for your participation in today's conference. Since we only
Joe,
have,
thank you.
you bet, since we only have 15 minutes, let's jump right into it. So first question, talk about your coverage universe so people have an idea of what your focus is.
Thank you, Joe. So Lake Street and I look for underappreciated companies in the healthcare marketplace that we think have a significant opportunity for long-term growth. So I am one of several people who covers healthcare at Lake Street, and I have what I would call an eclectic universe that's composed of medical device, healthcare services, healthcare IT, and even one pharma company.
Right. So, what are the macro themes, for the medical device space in 2024?
Yeah, great question. So I would say right this minute, and this has been true as we exited 2023, we are getting an indication that procedure volumes in the marketplace are very strong. And this is not a recovery from the pandemic disruption. This is a natural volume-based increase in activity that we think is driven by both the natural growth and aging of the population and by ongoing innovation in the medical device world.
Okay. What are you seeing specifically within the healthcare at home market in terms of trends?
Yeah, great question, Joe. So I would say, in our view, healthcare to the home is what we call a powerful secular theme. That is to say, we think there is an underlying tailwind driving growth in this sector, and we think that theme is likely to remain in place for a long time, like years, perhaps decades. There's powerful innovation going on in the medical device and product world that has increased the portability of devices such that taking them to a person in their home versus having them in a hospital or health center is entirely possible. Obviously, the patient demographics are important as well. The aging population suggests people would rather get healthcare in the home than have the discomfort of going to a health center or getting care in a center. And of course, there are powerful cost trends that suggest healthcare in the home is a lower cost opportunity for the system, which is a key driver going forward.
And that just kind of leads into, the next question here, which, I agree that technology is important. When we hear about things such as biometric devices and wearable technology, how do you view those two categories?
Absolutely an important facilitator of this healthcare to the home trend. As technology improves, the wearables are much less invasive and provide much better data in real time, such that patient monitoring is improved, such that interface with the patients is improved. So we think that's a market that has significant long-term growth opportunities, and we are actively looking for companies that play on those themes.
Right. And staying within the technology, AI is an important topic these days. How do you envision AI opportunities within the medical device industry?
Yeah, it's a great question, Joe. I guess I would say, not all medical device companies or products are suitable or adaptable to use AI, but where they are, it can be an important driver both for patient convenience and service, as well as providers. We think providers are going to benefit from the intervention of technology to streamline and simplify the interface they have with patients. So, big driver, probably early in the development or adoption phase, but we think over time this is going to be a powerful theme as well.
When do you think it'll become more of a real world application within the medical device space? Is this something we'll see in the next 12, 24, or are we looking longer term?
No, we think you'll begin to see some devices using AI. One of my colleagues, Frank Takinen, covers a company that has a neurology product that is enhanced by AI that provides important usage and information to both the patient and the doctor. That's a company called NeuroPace. We think you'll see more of that this year, and certainly it'll grow over time.
Okay. Kind of changing gears a little bit here, supply chains and labor, those have been two challenging areas for many companies that we've been hearing for a while now. What are you seeing within your coverage universe on these two important issues?
Yeah, those have been huge issues for medical device companies over the last, let's say, 2 years, really dating back to the pandemic. What I've heard recently is that in both cases, there's a real normalization that has impacted the business. So that is to say, supply chains much less of a factor, and labor availability has normalized such that procedure activity in healthcare facilities is really going off at a normal and, as we discussed, slightly elevated rate, and not being negatively impacted by labor shortages today.
So you're seeing, obviously, the companies you're working with are very optimistic about what they're seeing improvements with these areas.
Absolutely. And it is, I think, going to have a big positive effect on company performance in 2024. So lower supply chain bottlenecks, fewer labor issues, and as I mentioned, procedure activity up, not pent-up demand being recaptured, but a normal acceleration in procedure activity that we think bodes very well for company performance in 2024 and likely beyond.
That's great news. Glad to hear that. So, turning to the investor, I mean, how is the investor sentiment within your coverage universe?
Yeah, it's an interesting question. Obviously, the last 2 years have been extremely painful in my area, and frankly, in small and micro cap in general. We definitely continue to see the interest of investors, concerns about small cap performance. We're beginning to see a loosening of the reluctance of investors to invest in this space. We think they'll probably gravitate towards the stronger companies first, but we do think we're beginning to see increased interest in investing in small cap medical technology companies.
Well, that's great news for the small cap space. We can use it.
We can use it.
Just a little bit changing, looking ahead, what kind of sales growth expectations within universe can we see over the next year plus?
Yeah, it's an interesting question. Obviously, every company's a little bit different, but I would say low to mid single digit volume growth should be the norm for sort of the average company. And it's not out of the question that we could see growth in the high teens, low 20s, or even higher for those companies that have brought innovative solutions to the marketplace. So there's no cap per se on what the growth can be. And we are seeing a number of companies that are exhibiting ongoing strong growth performance that should be a catalyst for better stock price performance.
Good. How about on the income line? Are companies seeing margin improvements? Are they being pressured by inflation? Obviously, we've got a lot of issues surrounding that area. And, how are they dealing with the impacts, of the current environment we're in?
It's interesting, Joe. I would say while inflation has been in the news for, I don't know what, 12, 24 months,
Yeah.
the reality is I don't hear that much about inflation pressures from my medical device companies. That is to say, I think they have not had significant pushback in terms of raising price to cover the incremental costs that inflation has brought to bear.
Okay. So when you're looking at how to value companies, have there been any changes in your assumptions?
That's such a fascinating topic. Clearly, the market has preferred profitable businesses over the last 2 years. And realistically, what Lake Street and I think often what Lytham does is focus on companies earlier in their growth phase that might not be profitable yet. So we went through the pain of lower valuations. Some companies I cover performed exceedingly well, certainly as well as I hoped they might perform, and yet the stock prices went down. And that was a reflection of investors moving away from unprofitable companies. I think we're beginning to see both the companies recognize they need to deliver profitability, which is a key driver, and a growing awareness and acceptance of an earlier stage company that's showing high growth but margin improvement, such that we can continue to look out over time and be focused on a revenue multiple, but we definitely need to be cognizant of the opportunity company might have to drive margin improvement and get to a profitable performance.
That's great.
Yeah.
All right. Well, Brooks, we're basically just about out of time. Is there anything you'd like to close with?
No, I just say I'm excited about the coming year. We are seeing indications from companies that performance is strong, and we hope this year that's going to translate into better valuation and better stock price movement for these companies.
All right. We couldn't be happier if that happens. Brooks, thank you very much for your time today. I certainly found this to be very informative, and I believe our audience will too. Lastly, we
Thanks
have
for having me.
sorry about that. Lastly, we have a number of additional fireside chats that are coming up today. Please visit the conference homepage at lythampartners.com/select 2024. We hope you all enjoy the conference. Thank you, Brooks.
Thank you, Joe. Have a nice day.